Ronald again, back with another crypto video. Today we're going to address a very specific criticism of Bitcoin and cryptocurrency in general. That being the idea that because there is no physical form to cryptocurrency, that therefore it has no underlying, inherent value. Therefore, any price above zero is unwarranted. This view would underpin the idea that, the entire crypto market is essentially one big bubble that will at some point undergo like a catastrophic crash. And that's kind of a view that you would have to necessarily move past if you were ever going to become an investor in cryptocurrency. Today, I'm here to make the case for doing just that, moving past that. Before we jump in, just don't forget to drop a like and subscribe if you want to see more finance-related content like this. I thought of this subject after recently seeing an article from earlier in October 2021 where ex-NBA star Jalen Rose was asked about whether or not he held any crypto, and if not, why. And he said, I'm not invested. And the reason that, they kind of encapsulated pretty succinctly in the title was that just, it didn't have any tangible form. He couldn't touch it. And so he didn't know what it was supposed to be worth. He got into the game with, cash and real estate, and therefore that's mainly the type of asset he felt more comfortable investing in. This is also a bit of a follow-up to my video in the case for crypto, but more specifically addressing a criticism that I don't think I really emphasized in that video, which I think is important because this is, I think, a roadblock that a lot of people run into. More generally, just a lack of information and just not really having a great knowledge base in cryptocurrency and blockchain technology, but then also more specifically, seeing that they're not sure how to even say that there's any underlying value to cryptocurrencies. Let me just expand on the underlying concern here before we move on to why I don't think this argument really moves me very much. I think a lot of people mainly think of, like currency or gold as stores of value and stuff, and the tangibility and their ability to actually exist in the world gives them a certain sense of comfort. Everything they buy with money is physical, and therefore the money itself should be physical. Otherwise, why else would this be a fair trade that actually makes sense to make? I think that's kind of the underlying thought process that must be there. This, I think, is kind of the weaker formulation of this argument. A stronger form of this, I think, would actually be the kind of argument from the track record, which we kind of addressed in the last video, really, because that kind of more or less amounts to the argument from adoption, essentially. I think these two more or less amount to roughly the same thing. That stronger formulation basically says that, our assets like gold and fiat currency in general have been around for hundreds of years in the case of, the US dollar and stuff like that, or thousands of years like gold. And therefore they have a long track record of going through multiple market cycles, multiple black swan events, multiple recessions, depressions, etc., stuff like that. And since they've persisted, they're seen as, safer, longer-term assets to put your money in. Now, the argument from track record is really more what I addressed in the last video. So if you want a more prolonged discussion of that, feel free to, click in the top right, and we can see the long for argument of that. But in short, this is basically an ever-weakening argument as time goes on, and ultimately the final huge crash to zero that everybody keeps saying is going to happen just never happens. It's been over a decade at this point. Bitcoin was born into a recession, one of the worst recessions of our time, in that 2008, kind of the whole crash there. It's gone through black swan event at this point with COVID-19, the ensuing recession after that, which was almost a 30% drop in the broad markets overall. And it's still going strong. And as time goes on, as the value continues to appreciate drastically against the United States dollar, and it doesn't go to zero, and it continues to perform really well, I think with time this argument gets worse and worse and worse, just as a natural consequence of the performance of Bitcoin, and as time just goes on. Eventually this argument just has less and less traction, and really the question shifts to become Well, at what point are you convinced? At what point, how much time, how many recessions, what does it actually take for you to be convinced that this is actually not a fad, that it's here to stay? And you also got to balance that against the risk of just the opportunity cost, just the loss of, potential profits by staying out. Ultimately, by not putting your money into the best performing asset in existence right now, it's not that you're risk free because you're not in it. If anything, because of how much money there is in it at this point, with the track record in multiple recessions, it becomes a matter of you actually are at risk. You actually are giving something up by keeping your money out. Maintaining your purchasing power is best done at this point through something like Bitcoin or Ethereum, which admittedly, it has outperformed Bitcoin throughout its entire existence since about 2015, 2014 or so when it first came out. And it's, more or less doubled Bitcoin's returns in that time. If you consider that, you're risking even more by staying out. So at some point, you got to balance these two. How important is that track record? At what point am I convinced? And at what point is that argument that I'm having with myself about the track record outweighed by what I'm losing by not being in the game? And ultimately, reasonable people can disagree on the exact answers to these questions. Is it going to be one more recession, two more recessions? How long is long enough? You can have a reasonable discussion and disagree on the exact strength of the argument at the moment. But ultimately, if you ask me, I think at this point, at least some small, allocation is warranted in something like a Bitcoin, Ethereum, one of the big cap cryptocurrencies, at the very least. Maybe even 5 to 10% or something like that of your portfolio. Now, obviously, if you've been following along with my portfolio updates, then you know that, that's a conservative thing. For me, I'm 90% crypto at this point. I'm very heavily convicted. I have a very heavy conviction in cryptocurrency at this point. And so, that's me. But reasonable people can come to a completely different conclusion, and that's fair. Let's come back to the weaker form of that argument, as I feel that that's about as far as most people have generally thought things through when they first approach cryptocurrency. And let's talk about that a little bit more. I think that's more the direction that most people are thinking about. Let's take a moment to really think hard about the assets that we typically use for, purchasing power, preserving our purchasing power, what we use now and what we've used historically to try and, assign value and retain value. And yes, I am going to kind of de-emphasize the medium of exchange function of cryptocurrencies at the moment, like cryptocurrencies like Bitcoin in particular, just because, lately the narrative has been more, in the direction of store of value. I think that's pretty appropriate. If you've seen my previous videos, that's kind of more what I think they should be going towards. At the moment, we do have things like stable coins, and ultimately, I think it'll be a struggle, at least in the near-term future, for the utility of Bitcoin as medium of exchange to really match what is offered by, actually one-to-one collateralized, fiat-backed stable currencies, stable coins. And ultimately, I think what's more of a unique value proposition that Bitcoin has over these things is its store of value function. So the two assets we'll think about right now are fiat currency and gold. And let's start with gold, as this is, really more what, back when we were on the gold standard, how we, backed our currencies. It wasn't fiat currency, it was gold standard currency, and that's where money essentially got its value, because it was backed by gold. So what is the store of value, the value proposition of gold itself? Why did we assign value to gold? A couple of things there. One, it doesn't corrode, so you get some gold and you can just kind of keep it there, and it doesn't, get oxidized, doesn't rust over or stuff like that. It's relatively inert, so it preserves its own physical form in that sense. It is rare, scarce enough. It's not truly scarce as Bitcoin the way it was. We'll discuss in a second, but it's scarce. There's enough of it that you can actually make coins out of it, right? You can actually use it as a currency in coin form, but not so much that just random people are going to be able to dig large amounts of it out of the ground and, debase your currency. And then, nothing really. That's about all the unique value propositions of gold that it really has. Beyond that, gold only has value because we say it has value. Gold is a shiny metal that our child minds wanted because it's a shiny metal and we wanted some more of that. So we said it has value. That value at this point has fluctuated a great deal by just the laws of supply and demand, and at this point gold as an asset worldwide has about an $11.1 trillion market cap, as we saw in the last video. But aside from that, gold isn't actually useful for a whole lot. Sure, there are some electrical components and stuff like that that have gold incorporated as part of their structure, but outside of other niche uses like gold nanoparticles and certain applications in science, gold is really not that useful. We say it's useful, we're putting store of value in gold, but ultimately there's not a lot of reason for it to be that valuable. And to illustrate this in kind of a more extreme way, if you're on a deserted island, right? You're just on an island and you have a mountain of gold, it doesn't matter how much gold you have. If that's all you have, you're kind of screwed. You know what I mean? If all you have is a mountain of gold, if you don't have other resources, if you don't have fresh water, if you don't have food, gold is not that useful at all. And this is going to be important in a minute. There's a reason I mentioned that particular example. We're going to circle back to that. The basic point I'm trying to make there is that gold does not have intrinsic worth. In a way, it's essentially the fiat behind not fiat currency. The gold standard really just made us feel like there was something extra behind our money. But ultimately, it was a not intrinsically worthy thing that backed another thing that was not particularly intrinsically worth anything. But in the end, you can't eat gold, and you wouldn't really want to make a full shelter made out of just gold. Then, let's move on to fiat currency. Now, a discussion of how fiat currency is essentially, debt notes that almost in a way have negative value because of the way, central banking and fractional reserve banking work. That's a little beyond the scope of this video, the exact details there. I'll make a separate video about the intricacies of the monetary system and how that all works separately. But for the moment, let's suffice it to say that, when a regular bank loans you money, they don't just have like a store of money that they just pull from and they give you that money. No. They just write a number into their books and that money is created de novo and they just give you that money. It's a number in their accounts that they just kind of type in. That's how that's made. The only thing really limiting the, production of fiat currency is regulations and laws and stuff like that. There's actually nothing like physical mining that physically prevents them from actually making more. Now, at some people, they see that particular explanation and they kind of go directly towards, fiat currency is utterly worthless because it is just numbers in a computer. In a way, I get that argument, absolutely, but it is a bit of an oversimplification. We'll address that in that other video. We'll have to circle back to that. In the end, fiat currency essentially has value for the same reason that we say gold has value, because we said so, right? The difference here is that the supply of fiat currency is much more malleable than the supply of gold. Gold actually has to be physically mined. Fiat currency, once again, just regulations and laws that prevent you from just typing more into the system. So, unlike a system where supply is more predictable and potentially modeled by something like a stock-to-flow model, and then you can focus on the demand side of things, there are much more complicated. Modeling fiat currency's value requires, much more complicated models on both supply and demand. So that's, prices for goods and stuff like that, and interest and lending are much more complicated than with if you're on a purely gold standard. Now, think about what we just said there. The main ways that we've stored our value historically have all been things that don't really have any intrinsic value. But the criticism we're addressing here is that Cryptocurrency doesn't have intrinsic value. Bitcoin doesn't have intrinsic value, so why should it be worth any money? Well, it just seems like if we point out that cryptocurrency doesn't have any intrinsic value, it seems like a redundant argument here, because none of the money that you use ever, even back as far as the gold standard, ever had any intrinsic value. It never did. Now, what would a currency that actually has intrinsic value look like, right? What would that look like? I would argue that there's only one thing that we could use that would have intrinsic universal value that you could potentially have to use as a currency. If you insisted that your currency has intrinsic value, I would say that there's really only one thing, and that's water. It's only water, right? Not food, because a vegan does not value my steak the same way that I value it, right? Any food, choose anything, and nobody really agrees on that. Not air, because there's truly no scenario for scarcity whatsoever. Not energy, like electricity, because there's too many different ways of generating that. There's no way to stop people from generating that any way they want, from potentially things like sunlight that is just, coming from the sun, constantly bombarding us every second of every day. So there's really no enforceable scarcity there either. If you're stranded on a desert island with nothing else, water is your first go-to. If society collapses tomorrow, water becomes more valuable. If society doesn't collapse tomorrow, water continues to become more valuable as well. After all, everything around you can essentially be denominated in water. The total water footprint of a single bag of chips that you eat, that whole thing, requires something like 137 gallons of water for a bag of chips, right? So everything around you, it requires water for the processes to actually make it work. If you have like a microchip in like a computer or a camera or a light or something like that, not lights don't have microchips, but you know what I mean, microchips. Those facilities, those factories literally use billions of gallons of water. Like, it takes a lot. Processing various different things, the things that make our society possible, require massive amounts of water. Society collapsing, because society doing well, all of these scenarios require monumental amounts of water, more than you would ever guess to begin with. Everything around you requires way more water than we actually ever get to see. So, water is valuable in every situation to every living thing equally. Everyone dies if they don't get water for long enough. And it's not that long. It's a couple days. And as for scarcity, you actually kind of can try to enforce it here. Although I will say that ultimately, if you really did try and enforce it and use it as a currency, people would revolt. It has been tried, essentially. Nestle tried that in certain third world countries, and they straight up revolted and they wouldn't go along with it. But actually, there are certain countries and even certain small, municipalities and areas in the United States where things like rainwater harvesting are illegal technically. So you can try and enforce a scarcity there. I don't think you'd be particularly successful, because ultimately you can see where this is going. Right? If you actually tried to use water as a currency, the world would devolve into a horrific dystopia. This type of world is not a world where you would actually want to live. Because if water is currency, the companies, big corporations, are going to monopolize all the currency. And by definition, being poor would basically mean not having enough water to live. You'd have to keep working just to have enough to drink every single day. It would be a nightmare that you would struggle to ever wake up from. So yeah, frankly, I think if we started to insist that we used currency that had intrinsic value, we'd all be screwed. You don't want currency with intrinsic value. Money has value because we say so, and that is not a bad thing. Now, let's finish this discussion by circling back to crypto and specifically Bitcoin, because I think Bitcoin really does kind of exemplify what cryptocurrency has to offer to the world of, store of value. So far, we've more or less established that any currency we use is not going to have intrinsic value. And if that's going to be the case, then what does Bitcoin have to offer? It has a couple things to offer. First of all, it has verifiable, algorithmic, enforceable scarcity. There's going to be 21 million Bitcoins ever. We know that right off the bat. It's hard-coded. Enforceable, verifiable scarcity. That's number one. New Bitcoins are introduced at a pre-programmed, ever-decreasing rate. The supply side of the supply-demand equation is set. It's not a variable that you necessarily have to account for separately. That way, if you want to model price action, you actually long-term will probably end up having more luck with demand modeling, right? And it kind of simplifies things. Now, admittedly, we are in a phase of this growth where actually stock to flow, which is primarily a supply side model, is still pretty good at predicting price action. But eventually that will be invalidated and demand side modeling will take over as the dominant way of kind of seeing how Bitcoin price moves from then on. On top of this, there's a couple of other advantages. For one, Bitcoin can be transported instantaneously. You can send Bitcoin from one side of the world to the other side of the world as a blockchain transaction very quickly. Very quickly. With Lightning Network, essentially instantaneously. So transport, unlike gold or even physical fiat currency, is really, really quick. And actually, remittance payments internationally, if you're using like the SWIFT system or something like that, that takes time. It has bigger fees. Bitcoin is faster, fewer fees, much more convenient. And obviously, Bitcoin, it doesn't corrode either, just like gold. But even more than gold, I mean, it's digital. It doesn't just get destroyed. Gold essentially doesn't have any properties that Bitcoin doesn't do better. That's why people call Bitcoin digital gold. Unlike fiat currency, it can't be debased by some central bank. So in terms of fundamentals for a store of value type asset, it's pretty rock solid. Then, of course, the question, once you've established all this, becomes, well, how do you value it? Now, that's another question. That's a whole nother video entirely. We touched on that in the initial cryptocurrency video a little bit. There's multiple different potential models, and I'll make a separate video kind of more focused on that. But for now, suffice it to say that reasonable people can potentially disagree on the exact value of Bitcoin at any given moment. And there we have it. Don't forget to drop a like and subscribe if you got value out of the video. See you in the next one.